Welcome to the Real Estate Podcast with Robert Ikard. We have a podcast for you today, but I do want to let you know that we and our guests do not provide tax, legal, investment, or accounting advice, and you can read it on the website, the disclaimer, but the value of real estate can go up and down. It can go up as well as down, and investors may not get back the money they invested. So everyone needs to analyze their own real estate deals on their own with their own professionals before getting into anything. So our guest today is Joseph Kimbrough, and he is the CEO and founder of Apex Real Estate Investments. Apex Real Estate Investments is a privately held equity investment company. Joseph Kimbrough has many years of experience as a professional deal finder and acquires properties in landlord-friendly states such as Texas and the Southeast markets. So, welcome to the podcast, Joseph.
Yeah, thank you for having me on.
Oh yeah, it's my pleasure. We actually met on Twitter.
Mm-hmm.
So,
on Twitter.
Yeah, so it's a good place for real estate professionals to connect. I don't know, it's kind of a little bit better because you can see what other people are thinking and they're tweeting out, and you can see what they're interested in, and Joseph's active on that, and I am too, and we both met that way. And now I don't know a lot about Joseph or what he does. I know a little bit, but I'm going to let you explain. So first of all, you're from the Dallas area, right?
Yeah, I'm from the Dallas area. Grew up here in what's called the Oak Cliff area until I was 13, and lived all over the DFW area, actually.
Where we happen to be right now in Oak Cliff.
Yep.
And thank you to Jim Lake and Amanda Lake for allowing us to use this beautiful building, of course, with the beautiful view of downtown Dallas in the background.
And fun fact, this is my first time being in this building since I was like 8 or 9 years old.
Well, I hope you like the changes we've made.
Yep.
It looks nice here, and we do have some extra office space for lease. If anybody's interested, just give me a call in this building. And so we are in Oak Cliff, and we're on the edge of Oak Cliff and in downtown Dallas. And as you can see, there's downtown right there. So that's where we are. And tell me about how you got into real estate, if you don't mind me asking.
Yep, so I got into real estate when I was 24 years old. I got in as a wholesaler. Not sure if you're familiar with it.
Well, you know what? This is an educational podcast, so why don't you explain to the guests, because not everybody knows what that means.
Yep, so as a wholesaler, what you do is you go out there and you find properties, off-market properties, and you get them under contract, and then you sell them to an end buyer that's going to go out there and flip the property, and then they're going to go sell it. And so you make the spread in between, so you never have to make any renovations. That's what you do as a wholesaler.
So you're basically holding the paper.
Exactly. You just
in between the previous owner and the new owner.
Yep, you just literally flipping paper. You're taking a piece of paper and you say, I'm selling it to you for $5,000, or I'm selling it to you for $10,000. So how I got started was my first couple deals, right? The first one was $10,000. Lady going in foreclosure. Her ex-husband was living in it. She didn't want him in there anymore. He was basically squatting. So she let it go into foreclosure.
Oh, okay.
To get him out. So.
Oh, really?
Exactly. She let it go into foreclosure.
That's crazy.
So you'd be surprised what people do.
Yeah.
So we ended up getting the property, saved it from foreclosure, and made $10,000 off that property. Next deal, another foreclosure, made $15,000. And that was just talking to a bank. So within a 3-week time span, made $25,000 at 24 years old.
Wow. And so you started doing not foreclosures, but wholesaling.
Mm-hmm. Yes.
And so then how long did you do that?
I did that really for about 3 years. And then after so many times, like my 3rd year in, I got so accustomed to seeing $10,000 checks. I was kind of like, okay, this is like a new normal, but what I want to do is get passive income. And so I was like, I'm tired of just getting checks and then spending the money, getting checks, spending money, putting it back into the business. Because I always just put money back into the business. I never spend on like a bunch of fancy stuff, you know?
Because you had to put up money to buy the deals to
Exactly.
wholesale them, right?
Exactly.
They didn't just end up in your lap for nothing, right?
Yeah, but I quickly realized within that 3-year time span, I was like, I'm on a hamster wheel. I'm making checks, but I'm going nowhere.
Right.
I want to get passive income. So I started studying multifamily right before going to Tanzania in East Africa my first time. So I actually have if you look on my Instagram, in the stories, you will see where I'm studying multifamily while on vacation in Tanzania.
Wow. So what were you doing in Tanzania?
Did safaris, got to go to a private island.
Oh,
got
wow.
to go to Prison Island, also touch the tortoises, do like a bunch of beach pictures.
Oh, okay. I've never been familiar with that. Then you were still doing wholesaling at the time.
I was still doing wholesale at the time, but I was learning multifamily.
Okay.
So then when I got back from Tanzania, we spent like a month there. When I got back from there, I ended up going to an event that November of 2021. And then I was like, okay. I said, I want to get this here started.
Okay.
It was $30,000 for the to get started, like with the mentorship program. But I walked in there and walked out as an equity partner.
This was in Tanzania?
No, this is here in Dallas. When I
Oh,
got
okay.
back,
You just started thinking about it.
I started thinking about it before Tanzania, went on vacation, came back, and just started putting it into action.
Oh, okay.
Yep.
And so, did you take a course, or did you have a mentor, or how did that work to get into the apartment part?
So at first I had a mentor. I took a course at first.
Oh, okay.
And then I was gonna go pay for mentorship, but I paid for the VIP ticket to sit in the front row. So opportunity. I figured, well, if I'm sitting in the front row, everybody I network with in that front row, they either already doing this here, or they're a lot further along than I am.
Okay.
So let me learn from them. So
Yeah.
I went and I met the guy who's the equity partner for the group that was holding the event that November.
Oh,
And he's a fund manager.
okay.
So we started talking. I'm telling him, hey, look, I just sold 20 plus properties this year as a wholesaler. And he's like, man, he knew what it was automatically because he got started in real estate.
Okay.
Yeah, he got started.
Wholesaling?
Yeah, well, he got started doing seller finance stuff.
Oh, okay.
So he knew what I was doing because he used to buy from wholesalers.
Right.
Mm-hmm. So it was just a great connection to meet with him. And then he believed in me so much. Like he literally I had the cash on hand myself, but he didn't even let me spend my own cash. He instead took $12,500, $15,000, and he actually paid the attorneys for me to set my first fund up.
Oh, okay.
And then I paid him back like a few months later.
So, like I say, this is educational. So, if you don't mind, how do they set these funds up?
So the way it
Limited
goes,
partnerships, or
the way it works is you are the manager of the fund,
Mhm.
and then you have limited partners who invest. So when someone invests in the fund, they're a limited partner.
and you're the general partner?
And I'm the general partner.
Okay.
Yes.
And for anybody who's a little confused about what that means, limited partners means they invest money, but their responsibilities as well as their liabilities are limited.
Exactly.
And the general partner, they have more responsibilities and liabilities, but they call the shots and they direct the fund. Correct me if I'm wrong.
Exactly.
They direct it on how and where it goes and all of that. And the limited partners are supposed to stay on the sidelines and hope that the investment works out in a positive way. They have to trust the general partner
Exactly.
to employ the money in a way that they have confidence in, but they are supposed to stay away from the day-to-day management and day-to-day investments and all of that.
Exactly. And how I mitigate the risk for the limited partners is I work with sponsor groups who have a ton of experience. One sponsor group I work with, they have over 20 years of experience, and they own over 10,000 units in Texas and the Southeast markets.
Oh, okay.
I have another group I work with, they own over 6,000 units in the Dallas-Fort Worth area.
Oh, okay.
Another group I work with, they have a $100 million fund themselves, and they buy all over, like Phoenix, they buy in the DFW area, all over the Southeast markets. So I work with highly experienced operators to mitigate the risk for my investors. Okay.
So your main role is you're kind of like the money man.
Exactly. I bring the equity.
You bring the equity, and that's owner's equity. That means the money that individuals put into the fund, as opposed to debt, which you would get from a bank.
Exactly.
Debt financing, equity financing is the one piece of it. And you I'm sure in your capital stack you use a combination of different things.
Yeah. Yep. Exactly.
Yep. So a capital stack is just different types of ways of putting together all the money needed for these expensive real estate projects, like apartments.
Exactly. Yeah. Someone brings the debt. Somebody brings the equity.
So okay. So how did it start? What was your first deal, and how did that work out?
So for the apartments.
Yes.
Okay. So within 8 months of starting my fund up, in which I own 100% of, within 8 months of starting it up, I acquired 160 units in Charleston, South Carolina.
And
it was a 30,
so you got investors to invest.
Exactly. I got
Okay.
investors to invest in the fund.
Okay.
And then I invested that capital into a property in Charleston, South Carolina.
Okay.
And so that property was a $30 million acquisition.
Okay.
What else? We raised
Congratulations.
Thank you. And we raised $11,165,000. That's my first multifamily deal ever.
So you raised about a third of the price, over a third of the price of the property.
So not over a third of the price of the property, but I did bring a substantial amount to the property.
Okay.
For us to acquire that one.
That's good. And tell me about that apartment complex.
So that apartment, like I said, it's in Charleston, South Carolina. Currently, it is 86% occupied. We're pre-leased for 91% occupied.
Oh, okay.
Yep, right now.
And
Making renovations on about 18 to 19 units in the
Okay.
property.
So do you find these deals too?
No, so I personally don't find the deals. The operators, they go out, they find the deals. They bring it to me. They put together the whole package. They bring it to me. I look at it and say yes or no if I want to invest my investors' capital in that property.
All right. So on these deals, they don't just have one fund necessarily invest, do they?
No,
Or-
they have multiple people. So like I'll bring capital from my fund.
Right.
There might be another fund or like individual investors
Right.
that come in.
And then how do they? Some of these questions may be a little legalistic, but that's my background as a lawyer, and so do they have a limited partnership as well?
So the lead sponsors, they'll bring limited partners as well.
Right, but the operators, they put together what, an LLC or a limited
They have
partnership?
an LLC and
Okay.
they're general partners.
Okay.
Yeah, they're the lead GPs on the property.
Which means limited liability company, which is a way of owning property, owning anything, you get the benefits of the corporate limited liability. This is a really simple explanation, but then you don't have the tax ramifications of a corporation, or where you can possibly have double tax. But always check with your own financial advisor and lawyer about these type of different entities. That's not what this podcast is about right now. We are talking about other things, but it's very intertwined with the legalities and how it sets up. And I know people are interested in how it's all structured. And so mainly your job is to meet with potential investors, correct?
Exactly. Meet with potential investors, raise capital into the fund, and then take that capital and deploy it into properties that are going to yield a return for the investors.
And you just started in 2021 doing that.
2022, early.
Oh, wow.
And then, so February of 2022, acquired my first deal by the end of that year. Yeah. For
Wow.
the first, 8-10 months. Yeah.
And then have you done more deals since then?
Actually, currently raising capital for a property in Phoenix, Arizona.
Okay. Tell us about that.
400 plus units. Very great financing, less than 3%. I'll just say that. I could put direct numbers out, but I'll say it's less than 3% on interest-only loan. So it's a great opportunity.
Oh, how'd you find a loan like that in this environment?
Assume the loan.
Oh, nice.
Yep.
Nice.
Assume the loan.
And the bank agreed to that.
Yes. And
That is
the
great.
lead sponsor group that's over this one, they're excellent. Also, it'll be monthly distributions as well. So it's just an all around great investment for my investors.
Yeah.
And anybody else that comes into the fund to invest. It's a great opportunity, and so that's why I chose that one.
Okay, well, I have more questions about that, but assuming a loan, I'm gonna, I try to explain these terms. I don't want to assume everybody, no pun intended.
Exactly.
I don't want to assume people know what assume means. No, but just all these different legal terms. It means if somebody has a loan in place with permission of the bank, and sometimes it'll be written in the bank contract that somebody can assume it if they check off this, and this box. And then sometimes it may not be, but they'll just allow it. That means that, like, let's say Joseph had a 3% loan, and he said, Robert, I'm done with this investment. And he says, do you want it? And I'd say, well, what about, I don't want to go get 8% financing right now. He'll say, no, I got 3% financing, and you can take it over and you can assume my position. And he says, and then as long as the bank is in agreement, or the financial institution or insurance company or whoever is holding the debt on that, if they're in agreement with that, then it can all happen. And that's really a good setup for you that you found that.
The best part about it is it's interest only until 2035.
That is crazy.
Yeah.
So that's
great deal.
That is good. And tell me about the physical asset.
Physical asset, Class B, located in Phoenix, Arizona.
Okay, now for the benefit of our listeners, why don't you explain? We're talking apartments. Why don't you explain the difference between Class A, B, and C?
So Class C apartments, they're not as they're nice apartments in safe neighborhoods, but they're not going to be like your top of the class.
Okay.
A Class B is like in between the Class A and the Class C. So a Class B would be like some apartment buildings. If you're not familiar, if you're in Dallas, then you would know, like Frisco area, for example. You will find some Class B ones there. But then you have your Class A apartments, where those are the ones that everybody want to be at.
Mm-hmm.
Yeah, they have the rooftop pool,
right?
All the hot stuff that people are looking for.
Well, I mean, we're in Bishop Arts, and if you'll take a look out here, I don't know how long since you've been here, but everywhere you look, there are brand new apartment complexes going up, and it's just growing like a weed here. So every time I drive down the street, I feel like there's a new
building going up.
Yeah, new apartments and different buildings, and we have a lot of office product, and then we have our company has a lot of restaurants and retail in Bishop Arts, but it's just this DFW area is just exploding.
Yeah, it's like that in Frisco. Like I was driving down 121, saw just the outline of buildings, right? Drive down a week later, buildings are going up. Yes. I'm like, man, what, did y'all print the darn building?
Well, like right now, I can see two cranes just right now, just looking out the window.
Yeah.
But wow, yeah, Frisco is a story in and of itself.
Yes.
Since we're talking, I mean, this is just a real estate chat. Tell us about what's going on in Frisco. I'm not necessarily that plugged in up there.
Yep, they have like Universal Studios or something like a park or something like that coming.
That's coming, right?
Yeah,
yes.
That's going to be a few years from now, though.
But that's going to be huge.
Yeah, that's going to be huge. It's going to bring a lot of people in the area. I got to meet the mayor. They just opened a new library, so that's a huge plus. I've been to it a few times. It's amazing.
Frisco, Texas, and then it's also home to the Dallas Cowboys.
Oh yes, the Star. You have the Star. That's another thing. Like
tell the people what that means.
So
this is an international podcast.
Yeah. So at the Star, you'll see like Dallas Cowboys players walking through. As a matter of fact, I got mistaken for one. Somebody stopped me. He's like, hey.
You're a big guy.
He's like, man, you play for the Cowboys? I say, nah. I say, but they some of them invest with me though.
Oh, is that right? That's good.
So,
and the Dallas Stars is their training camp.
Working on it at least. Yes, the Dallas Cowboys. Cowboys Club. I'm not sure if you've ever been.
I've been up there, but I'm not familiar with all the different names for it all.
Yeah, so Cowboys Club. When you go there, it's you can look down and see them practice.
Yeah.
So you'll see like Dak out there throwing the ball.
Right.
You'll see Ezekiel Elliott or someone used to see him out there running
Yeah.
and stuff. So yes, it's pretty awesome. They walk through the club there, the Cowboys club.
Zeke isn't coming back, right?
I don't think he is.
I don't think so either. I don't know.
Yeah.
Sorry to hit you all with Cowboys fans with that bad news if you don't know it already. But
yeah, that's funny. I mean, it's nothing worse than getting close to winning every year.
I know.
Yeah.
So, but anyway, that is, I think, the most expensive NFL training and football facilities in the country.
Yep.
Is what I've heard.
Mm-hmm. Yeah, you have Cowboys Club there. You have
Restaurants.
Cowboys. You have restaurants. So that's what I mean. Like you'll see them at like different restaurants.
Right.
I definitely feel like I saw one of them at Mi Cocina just the other day.
That's a good restaurant.
Yep. And I'm talking about, I'm like, who else? Just him and this girl. And I'm like, now who else gets drunk at? I say, wait, it is noon. Yo, okay, nah, he plays for the Cowboys. Who else getting drunk at noon, man?
Well, it is the off season, I guess.
Yep.
And they work awfully hard, I know. But, well, okay, so you found this project in. How'd you find one in Phoenix? I thought you mainly wanted to focus on the Southeast.
Yeah, so mainly focus on the Southeast, but if the area makes sense.
Okay. And
And
that
it's like-
deal does sound
and that
like,
deal,
I mean,
like, you-
the financing
Like,
is
what-
the
like,
key.
Exactly, the financing. Like, you can't say no to that financing.
Right.
Like, to find that financing in the Southeast markets or Texas
Mm-hmm. Is
is very difficult right now.
right. I did
So-
read that some hotel group is handing over the keys to a lot of hotels up in Plano or something like that because they just had a lot of debt coming due, and I guess they couldn't. I don't know. The economy is kind of rough right now in a lot of ways.
Yeah.
And well, let me ask you that. Well, before I do that, let me ask you a little bit more about your deal in Phoenix.
Okay.
So, how many units did you say it is?
Over 400.
Oh, okay.
Yep.
So, how much is the apartment complex selling for?
So it's a $131 million asset that we'll be acquiring.
Wow.
The debt assuming it's about $80 million.
Okay, and what's the occupancy?
The occupancy, I have to double check though. I think somewhere around like 90-something% though.
Oh, okay.
Yep.
So
I have
that's
to double check though.
oh, okay.
And
So-
like plus like if you want more details and stuff, feel free to reach out to me.
Oh, yeah,
on
well,
Twitter, Instagram.
Well, if I forget too, though, why don't you tell people how to I may forget easily.
Yeah.
So why don't you tell people how to contact you in case I
Yeah.
get lost on a tangent or something?
Oh yeah. So on Twitter, you can find me at RealJKimbrough, and then on Instagram you can find me at Joseph Kimbrough.
And can they call you?
Yo, yes, and you can also call me at 469-458-9295.
And finally, what's your email?
My email is joseph@apexreiholdings.com.
So you maybe say that one more time if you don't mind.
joseph@apexreiholdings.com.
All right. And Apex is your baby.
Yep.
Right?
Apex Real Estate Investments.
Okay. Now, how do you find your investors?
A lot of networking.
Okay.
Plus, I'm allowed to market. It's a 506c fund.
Okay. Tell the folks at home what that means.
Basically, the difference between a 506b and a 506c. As a 506b, you have to go out there and do word of mouth, talk to people, establish a pre-existing relationship with the person. That's how my fund started off, with me raising capital is a 506b. When you switch over to a 506c though, then you can literally scream from the mountaintops, invest in my fund. You can do any type of marketing, billboards, commercials, social media. You can just advertise everywhere as a 506c. The difference is you can only accept accredited investors in a 506c fund.
And tell them what an accredited investor is.
Yes, so accredited investors, those are people who they either make $200,000 a year for the past 2 years consecutively as a single individual, or $300,000 if they're married, or they have a net worth of $1 million excluding your primary residence, according to the SEC.
And that makes you an accredited investor, and
Yes.
where you're allowed to come into that fund.
Exactly.
So you can't just, so what kind of tranches of money do you require from your investors in order to come into your fund?
So the minimum investment is $100,000.
Okay.
That's where we started.
Okay.
Plus, I have to know that you are an accredited investor, so
Right.
your CPA, attorney, or registered investment agent, like your advisor or someone, they have to sign off on a form that I give you that qualifies you as an accredited investor.
And 501c and 501c3 and 506.
Yeah.
These are income tax. I'm sorry, 501 is charitable.
Those are
but
charitable.
506. These are all, even the charitable one. They're all provisions of the income tax code, is what we're talking about.
Yes,
And
we
they
send
have
out
different
K1s.
Yeah, yes, and they have different rules and what they apply to. 501c, you may have heard of, is for charitable institutions, and now he's doing 506b and c, right?
Yep, 506C.
I'm sorry, 506c, and then the other one you talked about was a
506B.
506b.
That's the previous one I did.
And what are the rules on that one?
506B, like I was saying, with that one, you can take non-accredited up to 22 non-accredited investors, and you don't have to do all the extra precautions to make sure that they are accredited. So,
But you cannot advertise it.
but you cannot advertise it.
These have to be basically, the idea is they're supposed to be people you know
exactly
already.
Exactly. So
Right.
basically, let's put it like this. Let's say you have a 506C fund, you raise capital, you have 1,000 investors on your email list. You know for a fact that quite a few of them are non-accredited. So you close out one fund, you set up another fund. You can start it off as a 506B and give X number of days. Let your investors know, look, you have 30 days as a non-accredited investor to invest in this fund. I'm only accepting 22, so take your position. Then after that 30 days, you contact your attorney, hey, switch it over to a 506C. You've already gotten, let's say you raise $1 million already. Now you switch it over to a 506C, you turn around, you market that out to the masses, and now you bring in only accredited investors.
On top of the ones you've already brought in.
On top of the non-accredited. So now you give your non-accredited investors an opportunity to be invested in these properties just as if they were already accredited.
Okay, so the first group that does not have to be accredited, what kind of dollar amounts do you take from them? The same, 100,000 or what?
I still say 100,000, but I will let them in for like 50,000.
Okay.
You know, you could even do 25,000.
So I guess you've been doing real estate for a lot of years, and this is how you've made a lot of your connections, I suppose.
Yes, a lot of my connections through real estate.
Through the wholesaling.
Yeah, through wholesaling. I mean,
Right.
I had a list of 5,000 to 6,000 just cash buyers on one list.
Oh, okay.
Yeah.
Well, that's
That's how I was able to sell properties in 24 hours.
I see. But you wanted to move it. Now, do you take an equity position in the apartments?
So yes, I can reinvest in my fund with my own capital as well.
Okay, and that's good. And so you're just getting started. You're brand new in a way.
Yep.
I mean, it's only 23, and you did it. But so that's good. That's interesting. We'll have to follow your progress over time. And tell me about the type of people that like to invest with you. I mean, if I know we talked about
Yep.
different definitions of how you define different people, but tell me about who does this.
So the people who invest with me are people who have a lot of money, no time. So that would be, for an example, let's say professional athletes. They
Right.
have money, no time. They don't want to deal with looking for properties.
And they also may not have the sophistication that you do.
That's true too. Yes. And then also doctors, surgeons, plastic surgeons. They have a lot of money, no time.
Right. And
So-
also, same again,
Exactly.
the lack of sophistication in,
Like it's,
you may be a doctor, or a lawyer, or
but it
a
doesn't mean
football
you can
player.
also go buy a building.
Right, you're right, because it takes a whole nother skill set to
Exactly.
get involved in real estate and know what you're doing there. And so they know you have that.
Exactly. So I bring my skill set, partner that with their money, and that's how we're able to acquire these buildings.
Okay. And really, I think a lot of professional athletes would benefit by getting, how many examples could you say of athletes that have made a lot of money if they would have put it in let's just talk about apartments, nothing
Yes.
else. What,
That's actually one of my missions, is to get in front of more professional athletes.
yes.
To show them what this is, so that they can get invested into these apartment buildings and secure a much better future,
Right.
financial future.
Right. And because, these guys are great athletes, but they'll come out of high school or college and boom, boom,
They
boom.
just
It's all
splurge,
sports.
splurge.
It's all sports. And and yes, and then they'll go buy a big home, which is not really an asset.
It's not an investment.
Okay.
That's
Why,
what it
why
is.
is a big home not an investment?
Because you live in it. You can't rent. You're not renting it out.
There's
You're
no
not
money
cash
coming in,
flowing
right?
from it. Yeah.
It's just a money suck.
Same as far as buying a car. Like, you can buy a car, but that's depreciating asset.
Right. Quickly.
$20,000 going down the drain just like that. You
Right.
can't resell it.
Right. And so a lot of these guys, they come from poor families. This is the first time they've been thrown all this money, and they're like, all right, I'm going to live it up and all that. But really, I think, and I like your mission too, because I would like to help them also if they ever need any help. Because the thing is, if you have an asset and it's paying you a return, through rents, through like what you get in real estate.
Exactly.
That's the money you can use to go buy your
nice cars.
your nice car, your nice home. But then you don't touch the money that you have invested in the principal, the principal, and
Yep.
then you'll have a good life.
You take your active income and you turn it into passive income.
Right.
That's how you create financial freedom.
And you use the passive income to go buy your house and your
Your
car
houses,
and
your
everything like
cars,
that.
all those
But you
things.
first need the investment income.
Exactly. Like, I have one rule. I will not work to maintain a lifestyle. Meaning, I'm not going to go out there and work, sweat, toil to go and buy a car. I'm going to do all
Right.
that hard work, and I'm buying an asset that's going to buy the car.
Right.
Exactly.
Yes. That's very smart. And some people.
I've already told my friends, I was like, if you see me in a Rolls Royce, just know that was covered with 1 month of passive income.
Yeah. Otherwise, you're not buying it.
Otherwise, I'm paying cash. That's it.
Right. Well, I always find it fascinating. Warren Buffett lives, I think, in a $300,000 house that he's lived in forever in Omaha, Nebraska, and that's how he lives.
Yep.
And the guy is one of the richest people on earth, but
Yep.
he doesn't need a fancy. And they asked him one time, I think in an interview, they said, "Why don't you have a yacht? You can afford a yacht." And he said, "I'll let other people worry about having yachts, and I'll go for a trip with them."
Yeah, exactly.
But that's a really smart investor,
Mhm.
because he's more focused on making the money and being prudent and conservative with his lifestyle, and it's not all about lifestyle.
The goal is generational wealth.
Yes. Okay. Tell them what that means.
Generational wealth means you're not just acquiring wealth to last in your lifetime, but to last in your children's lifetime, their children's lifetime, and their children's lifetime. You want it passed down.
Right. And there's actually, I used to be an estate planning attorney. There are actually trusts you can set up
Exactly.
that will, if you have enough money to pay the lawyer bills and everything, to set them up that can help out through the generations, and where your children and grandchildren aren't necessarily able to get to the money and foolishly spend it, where there's some direction and
Yep.
conservative management. It can be a corporately managed.
That, and you gotta leave clear instructions for them too.
Yes.
Like the Rothschilds family. Ever read the book The House of Rothschild?
No.
It's a great book.
Tell me what you learned there.
So it talks about, and this is actually like my whole investment philosophy I learned from this area. So they funded two sides of a war, right? So no competition.
No.
Because you funded two sides of a war.
Right.
So either way you win.
Right.
So that's my whole investment philosophy when it comes to investing as a fund manager in these apartment buildings. I don't consider myself having competition because I'm willing to invest with whomever is providing a good deal.
Right.
As well as go out there and find my own deals.
Right.
So when you invest with everybody who's at the top of the top or close to it or up and coming, then you effectively have no competition. Everyone is collaborating and you go a lot further.
Right. And when do you put on seminars to your investors, or is it mostly just connections that you've had and you work the phone and you meet them in person?
Mix of both. The first part, like you said, and then also advertising, bring in leads. They go through my email list. They get a few emails. They reach out, get on the phone, they invest.
Right.
So it's a whole
and
system.
And you have a prospectus
they can look over. They look over my private placement memorandum.
Okay.
And they have to read through the subscription agreement, sign off on it, and then they can invest. Once they CPA, of course, say that they're accredited.
Right. And of course, there's no guarantees with this or anything else, right?
Yes, there's no guarantees, but we do have like things in place such as preferred returns and downside performance protection hurdles as well.
Okay. Well, the thing is, I mean, yes, there are risks, but the thing is, I've seen companies like stocks, which I'm not a great fan of. Because I don't understand them. I do understand real estate better, but stocks I've often seen. I mean, not often, but it can happen where there's some scandal with an executive or there's something going on, and the stock is worth next to nothing in a few days.
Yep.
The thing about real estate, there may be a scandal or two or whatever, but the real estate is still there.
Exactly. It's still there.
You're not relying on some hotshot Wall Street wizard or tech wizard or whoever the wizard is that formed the company you're kind of investing in that person when you're investing in stocks in a way.
Exactly.
But when you're investing in real estate, you're not really investing in some wizard. You're investing in a hard asset.
A hard asset. That's why you got to look at the numbers and trust the numbers. Like I said, with that 400 plus unit property in Phoenix, the numbers don't lie. Like it's a great deal.
Well, the thing is also, what I like about real estate is you can look at the numbers on a particular investment, okay?
Yep.
And that's good and that's encouraged. You should do that. But you can also research neighborhoods. You can research demographic trends. You can research this is one thing I've done. And this is may sound like a crazy idea, but I like to talk to policemen.
Oh yes.
Believe it or not. I'll talk to policemen on the street in the area where I'm thinking of doing an investment. Mm-hmm. And I will say, can I talk to you for a minute? And usually they're happy to talk to you, that they're not out to get everybody. But the thing is, you say, and I've done this, I've talked to them, I've said, is this neighborhood in 5 years, do you see it getting better or worse? I've had that conversation with police. And they, believe it or not, know more about neighborhoods. Well, of course. I mean, it's not that.
They're in the field.
They're in the field.
It's like asking a military officer about the how's the war zone. He knows everything about it. He's in it.
Yes. And they've also seen the past. The past doesn't mean that's where the future, but they can spot trends. And policemen can do that.
Yep.
Policemen and other people. But yes, they can tell you, oh, well, crime used to be really bad here 10 years ago, but it's gotten a lot better and there's all kinds of nice stuff going. Things you may not see when you're just coming in, boom, cold into an area. You don't see trends necessarily, but a policeman and people like that who are on the street, they see the trends and they can tell you the other way too. They can say, oh, this place is going down or whatever. And that can happen too. But and I've also talked, and like with apartments, I've actually looked. I've also talked to tenants.
Oh yes.
How's it going here? How do you like it here? And you can get a feel for it there. And some of them say, I love it here. And some of them may say, oh, the management is terrible or whatever.
Yep.
Or the management's great, or we have new management and they're doing great, or
They don't have enough events and stuff.
events. Yep. All that kind of stuff. And they can be a wealth of information if you're studying a real estate asset. And that's what people like you do.
Exactly.
You do your research. You do some boots on the ground research. Because your investors aren't really going to be able to go to all these places
Exactly.
and do that,
Yep.
So that's good. And those are just some ideas. If you're wanting to buy a piece of real estate in a certain neighborhood, you obviously don't want to buy in a neighborhood that's going down.
Exactly.
There's no
You don't wanna do
upside.
that.
There's no upside to that. And some neighborhoods are going down.
Yep.
Some neighborhoods are going up, and you want to find those neighborhoods. You got to realize also when you talk to a policeman, their view may be a little bit hard because all they deal with is crime.
Exactly.
They only see the worst of the worst
Of people.
You're
Yeah.
right, of people and situations, but they will see trends too. And if they say it's getting better, I would believe them. A neighborhood, or they can also say it's probably going to be about the same in 5 years, and that's actually not bad if they say that. So this apartment complex, does it have a pool and things
Oh yes,
like
it has
that?
a pool, workout facility, everything, every whole 9 yards. And the thing about the opportunity is for with this particular property is I'm leaving it open to accept investors for this one until the end of the month.
Oh, this month. Okay.
Yep, until the end of July. We're in July, right? Yep.
Yeah. So let's see. Not much left of July.
Yep.
And so that's good. And are you still going to be doing any wholesaling, or are you just
Oh no, I don't do wholesaling anymore.
you put that in your rearview mirror?
Yep. Leave it where it was.
Okay.
No more hamster wheel, man.
Yeah.
Got enough cardio.
Well, I mean, apartments are a solid investment. I've always liked them because, it's interesting. In fact, I'm glad I remembered to ask you this. I wanted to ask you, interest rates. We talked about that a little bit earlier. Well, it's hitting potential homeowners real hard.
Oh yeah.
And so how's that affecting the apartment industry?
So, the way that works is interest rates put a lot of pressure on people that can't necessarily afford to go buy houses. So, they start living in apartment buildings. So, it further benefits apartment buildings in the long run.
Right.
Because you have a much higher renter population.
Right.
So, in this time, you want to be invested in apartment buildings if you have the capital to do so, because it's only going to appreciate from here.
As well as I think we have a housing shortage.
Yeah,
is what
that's
I've
another
read.
thing. You have a housing shortage. People can't build quick enough.
Right.
There's not a whole lot of developers out there.
Yes, and really, I think a lot of these developments are stopping because they're having trouble.
Interest rates.
Right.
Yeah,
Back
so
to interest rates
back to
again.
interest rates. Yep.
For two reasons. It hits the developer. Well, three reasons that I can think of right now. It's going to hit the developer for a bank may not want to make them the loan
Yep.
like they may have in a lower interest rate environment, number
Yep.
one. Number two is they're trying to sell it to people, and people are looking at, as the rates go up, obviously the amount of home you can afford goes down.
Exactly.
And because a lot of your income doesn't really change because
Yep.
interest rates keep going up. So the amount of home you can afford goes down and down. And in the DFW area, yes, we're affordable still compared to other places in the country, but it's becoming less and less so.
Yeah.
And you're having to go further and further out from the middle.
Yep.
And
Phoenix is like that too.
Oh, it is?
Yeah, it's picking up. Like a lot of people are moving there.
And they're moving out, I suppose. Yeah, they're moving further out in order to find affordable housing. But even so, And then there's a third thing that's going on with interest rates is I think a lot of individuals who are on the fence about buying a home, well, first of all, you kind of missed the boat in a way because they've gone up so fast in such a short period of time.
They should have did that a couple years ago.
Yes, and if they didn't, now they're saying, well, actually I ran a poll on Twitter and I asked for, I don't know if you saw it yet or voted, but I know not everybody sees everything people post, but I said, where do you see interest rates, home mortgage rates? I threw that word in there.
Yeah.
I said, where do you see it in 1 year, 3? Oh no, I said, do you see home mortgage interest rates coming down again in 1 year, 3 years, 6 years, or 10 years or more? And so far, I've gotten votes on 3 years and 10 years or more.
Yep.
And that's kind of a gloomy.
It's definitely a renter's nation. Like,
yes, it is turning into.
And people have been like pitching that for the longest, saying America's going to be a renter's nation.
Yes.
So you want to be invested in apartment buildings. This is the time.
Yes, and also, apartment living is a good option for a lot of people when they look at the, like
the amenities alone. It's a great option for people.
Yes,
and
amenities you can't necessarily afford in a home.
Exactly, you don't have to tend to stuff like cutting the grass, watering the yard.
You have a swimming pool.
You have a swimming pool. It eliminates a lot of your responsibilities.
Yes, that's a good word.
Yeah,
and. You may have a gym.
You have a gym, exactly. It could potentially eliminate a gym membership. Now you're saving that $100, $200 a month.
Yes. So it could, exactly. And there's social events.
Yep, social events, you can meet people.
Right.
If you're single, that's great.
Yeah. You don't necessarily want to be in a house all by yourself in a suburb or something.
Yeah, exactly.
And so the thing is, when interest rates keep going up, it's really, I think, tilting. But it's a two-edged sword. The financing for apartment complexes is going to get more complicated too.
I think.
What are your thoughts on that?
I think so, but then there's a lot of opportunities due to just deferred maintenance with some operators, where you will have opportunities to assume loans. So, hence why I choose the most experienced people to invest with. Because in a time like that, they're going to be the most savvy investors to be able to go on and assume that loan. The bank is more willing to work with them than like a new guy coming in and saying, I'm going to do this by myself. They're not going to, he's not going to get he's going to have to get a new loan. He's not going to get the same benefit.
Right.
Yeah.
Right. So it's discrimination against the new guy, but it's a tough environment out there.
Exactly. And they want to know, banks want to know, look,
yeah.
Are you going to be able to handle this?
Right.
If you're like, it's my first deal. No, they don't.
No.
They're going to work with the person that comes in, I own 10,000 units. Okay, I'll work with you.
Right.
So that's
because you've been around the block.
Exactly.
And operating in an apartment complex is not necessarily easy either.
It's not. And so there's a lot to go into that. So that's another thing. When you say, I went full cycle on 26 properties, I averaged this amount, I own 10,000 units, the banks they're going to, even brokers, they're going to respect you. The banks are going to respect you. The operator you're buying from is going to respect you. So it's just much more beneficial.
Right, to work with experienced operators.
Exactly.
That's good. And so where do you see yourself in, let's just say, 5 years from now?
5 years from now, see myself.
That may be an unfair question, but whatever. Yeah. I'm just curious.
One is selling some of these here buildings, so I'm getting the cash lump sum. That's one. But in all seriousness, though, but also setting up my own $100 million funds, taking one or two of them public, and acquiring $10 billion in assets under management with one of those funds, or both actually, and then you could turn around and resell it. You could do anything with that, and just take it public, get the cash infusion from that, turn around and buy more buildings.
Okay, and so are you? But you want to keep your focus on apartments?
Yes, I want to keep my focus on apartments.
A multifamily is another word.
And I might venture into some freestanding emergency rooms, or just keep that as like a personal investment for myself. But we shall see on that one.
Okay. And medical's a strong area.
Yeah, medical. You're gonna always need medical. You're gonna always need car washes. So, like, I'm noticing some other things that I can invest in as well because when you set up private equity funds, the horizons is there. There's so much you can invest in. You can invest in liquor. Now, I'm not investing in liquor because I don't believe in that. I don't like the fact that people literally die every day because of that kind of stuff.
Right.
So that's why I would not invest in that.
Right.
But car washes, medical facilities, that is much better.
So, in other words, your philosophy is you want to get into real estate investments where you see a strong demand.
Exactly.
And so that would be those type of things. And I used to manage like 5 hospitals for a company, and it was very strong. They had very strong balance sheets and outlook and dividend payment history and things like that. So I just wanted to glance a little bit. I'm not into okay, here I did have a few questions that I wrote out.
Okay.
What are some basic principles that you like about real estate that you share with your clients?
Basic principles?
Yes. That real estate as opposed to maybe some other investments that they can put their money into.
I would say that they get above market returns, tax advantages, and then also cash flow. Like, you're investing in something that's a hard asset that's going to pay you either on a monthly or quarterly basis. So just like I was saying with the property in Phoenix, that one in particular will be paying my investors on a monthly basis. And then I have other properties that will pay my investors on a quarterly basis.
Do they get that payment right away? Or
Not
do
right
they have
away.
to wait a certain period?
You have to wait a certain period of time. Okay. So within 90 to 180 days of acquisition of the property is when you see your first distribution.
Oh, okay. And that first period is for like just the settlement of the legal and the management.
Exactly.
Do your people and your organization, do you change management? Do you keep, or does it depend?
We typically keep the same management.
Okay.
That we place, right?
Oh, you place the management.
Yeah, we place management. We're not going to just assume the same management team because, well, for obvious reasons.
So you do change the management.
Yeah, we change
right
the
away.
Management. Yeah,
okay.
right away.
Okay.
But then we keep our management team there. So.
Right. Right.
Yeah.
But that's good. I mean, management is so important. I do a lot of property management, and you cannot underestimate how important real estate management is.
Exactly.
And good experienced managers. So let's say a school teacher couple came into you, and they're in their late 20s. How would you advise them to look at real estate as an investment?
So, depending on their amount of cash on hand that they have. Typically, if you're a school teacher, you're not accredited.
Okay.
So with this particular fund, they wouldn't be able to invest. But they do have an option of REITs that they can invest in. I would suggest that they look into...
And that stands for Real Estate Investment Trust.
Exactly.
And many of them are publicly traded.
Exactly.
And it's a way to get into real estate.
Yep.
And have
at a lower cost.
Yes.
And I plan on setting something up like that. That's why I've brought up a $100 million fund. It's not going to be a $100 million 506C. It'll be a $100 million or $75 million Reg A plus fund where it's set up similar to a REIT where you can invest as little as a couple $1,000s.
Okay. So you want to have that option for people in the future,
exactly,
where you can have different tiers for different people.
Yes, exactly. You can have your accredited investor tier. Like, let's say you want 25 million of the 75 million to be all accredited investors. That should be pretty quick if you've been doing this long enough and have the investor base to raise that.
Okay.
And that should get you already in some deals so that your people investing 2,000, 5,000 not just coming into a blind pool fund.
Okay.
So you still have 50 million for them. You can even take that public. Once you get your accredited investors, take it public, and then have everybody come in to fill in the $50 million position, and they're already investing in property.
Okay. And so this is not so technical, but how do you help people that might be stuck in a rut financially or motivationally?
Stuck financially or motivationally?
In other words, they don't feel like they're making any progress financially, or they're having trouble motivating themselves. They'll say, I mean, there's a lot of people that'll say, yeah, I'd like to do that, or that's interesting to me, but they're not.
They don't have it in them to just go and get it done.
Yes. How do you motivate somebody like that? And I know that's maybe not your job, but I think it's all of our jobs in a way.
Yeah, that's tough. I mean, as far as somebody wanting to get started, I would tell them you have to really invest in yourself. Be willing to pay for mentors. Be willing to pay for, and really the motivation part and accountability partner, right? That's what a mentor is. They're gonna make sure you're doing on the right track, taking care of business. So, I can say that I've technically always had mentors.
How do you find your mentors?
Right place, right time. Be out and about. I talk to everyone.
And just be curious about people,
Exactly.
Be open-minded, open to talking to people, and
Exactly. Like even out the country, I talk to people, learn the language, Swahili, for example.
Oh, really?
Yep. Learn how to speak a little bit of that language when you're over there.
Oh, nice.
Learning Amharic.
Okay.
Learning, how to speak Hebrew fluently. So just like talking to people.
And just learning and showing an interest, and
Exactly.
and it's amazing. A lot of people who have a lot of experience, they don't get anybody even asking them how they did it.
Yeah.
They rarely do.
Mm-hmm.
And so when somebody does come up, they're more than happy to share their knowledge with you. Isn't that right?
Exactly. Yep.
So, but motivational, it's hard. I've read a lot of books about real estate, and I've read so many of them that I can see a pattern, and the information isn't too. None of the information is really new to me anymore. But what I like about them is each one of them will motivate you in a certain way, and it's usually the beginning of the book.
Yep.
And you read, and there's just all kinds of real estate books, but that's what I love most about them is they are kind of motivational.
Yep. Exactly.
And those are the best books.
Yeah.
So,
exactly.
Well, thank you so much for being our guest today on the podcast, and I want to definitely, if you don't mind, in the future get together with you for a podcast, especially since you're local to the area.
Yep.
And I want to see what your projects are in the future and how things are working out.
Yeah, definitely. And I'll be happy to give updates on it.
Okay, great. And we'd be happy to have you. Well, thank you very much.